have, yeah.
What were you going to say about lending?
2 minutes, new main speakers.
So we've got 2 minutes and, Sam's here and Tracy. All right, now, Sam and Tracy, I'm just going to take a quick photo so before we jump on for LinkedIn.
All in? Yeah, we do.
Can you all
Spin around?
Ready? Done.
Okay.
Got a very good one as usual.
Love your work as always.
Let me show the starting slide now.
What time is it? That's right. We've still got a minute.
Okay, Tam.
I'll still get up there.
Yeah. Oh, yeah, no, that's fine.
The recording has started. Get in here, do it.
Recording is on.
Okay.
We've got
People in the
right,
chat.
people are starting to jump on now.
Just let me know. We've got 1 more minute before we open up the.
Yep.
We've got a couple of note takers. Are you ladies happy with that?
Yes, of course.
If you're fine with note takers, that's all right. We'd just like to ask. It's funny how it's different rules of thumb. Some people really oppose to it. Some people don't mind it.
30 more seconds.
The Hunger Games. Do you want to admit and I'll mute? Because that's a bit of it all just happens.
Okay. All right, let's let everybody in. Hi, everyone. Just letting everybody in. Excellent. Great to see some great faces and not just hiding behind our initials. Hi, Nikki. Great to see you. Just wait 1 more minute.
I've been kicked out.
All right. Well, let's get started. Thanks for coming on, everybody. This is Series 5 of our Lunch and Learn webinars, and we've got a good crowd starting up now, which is great. Today, we're going to have an economic update and some franchise lending tips at the end. It is hosted by the NAB. So I'd like to introduce you to Desi first. Desi is head of franchise for the NAB, and she has been in this position for quite a few years now, and most of you probably already know her. And if you don't, you'll get the opportunity to meet her at some stage, I'm sure. So over to Desi to introduce everybody at the round table there at NAB.
Thanks, Helen. Can you hear us all okay? Nod. Somebody nod. Yeah, perfect. Excellent. Thanks, Helen, for the intro. I'm the head of franchise for NAB, and we are going to present a bit of a markets and economics update, as well as a few hints and tips. It's actually been a really interesting few weeks with the budget announcements, Trump's tariff extravaganza, the RBA holding rates last week, interest rates starting to go down. So lots and lots happening, as well as obviously the election called. So with that, I've got Sam Sainsbury here to my left, who runs our interest rate risk management team in New South Wales. And I have Tracy Ferguson to my left in the white, who runs our foreign exchange team here for New South Wales at NAB. Both ladies have extensive experience in markets, economics, all things interest rates and FX, and really help a lot of our customers in business and private bank around their domestically as well as international exposures, if that's something that's there. Before I hand over to them, I also wanted to introduce Arania here. A lot of you likely have met Arania before. She runs our small business team, and we work very closely together to look after customers from the small franchisees up to some very large franchisees and franchisors as well. Now, before I hand over to the ladies very quickly, a recording will be sent out after today's session, and that will comprise myself and Arania's details as well, so that you can talk to us about anything that you see today, or if you want to connect more broadly on a franchise level. And we are very happy to have this as an interactive session, i.e. either put your questions in the chat box or maybe raise your hands or call out if you want to ask a question. The ladies are happy to take them as they go. So without further ado, I'll hand over to Sam.
Thank you very much, and good afternoon, everyone. It's a little bit of a tale of two stories in markets at the moment. So there was pre-Liberation Day and tariff announcements, and then there's a post-series of events there. So what we'll do is we'll take you through where the market was looking and what our expectations were, and the impact that those tariff announcements have had on market expectations. In terms of the RBA, we'll talk to what our expectations are for them and what they will be thinking about at their next meeting in May. Take a look at what other central banks around the world are doing and why they have made their monetary policy decisions and their outlook for them. We'll touch on what the federal budget impact might be in terms of inflation and rates, and then talk about the events of the last few days as we've seen the Trump impact on markets and the Australian dollar. So if we have a look at the RBA, they remained on hold in April, which was very much expected. If we look at the prior decision in February where they cut rates, that was entirely factored in. So when we saw the announcement at 2:30 on that Tuesday afternoon that they had indeed cut by 25 basis points, there was no market movement at all. Interestingly, though, at 3:30 when Governor Bullock presented at the press conference, off the basis of what she said there, we saw rates move higher by 6 basis points. And essentially, the detail and the rhetoric there was that the decision to cut rates in February at that time, and the market conditions very different today, but at that stage, the cut was essentially a reversal of the last hike. So in November 23, the RBA passed through its last interest rate hike. And at that time, it was more of a cautionary hike. It was a just in case we need to. So the February cut was the reversal of that cautionary hike. And it wasn't, and Governor Bullock was very clear to say that it wasn't to signal a deep cutting cycle. So that made markets less confident about the prospect of future cuts. And we saw the immediate response where 3-year swap rates rose. The RBA remains very focused on inflation and the risks that may or may not move in line with their forecasts. They are actively seeking to hit that midpoint of the 2 to 3% band. So if you look at what the RBA's job is, essentially it's to get underlying inflation between 2 and 3%. They have said that they are actively targeting the midpoint of that. And their forecasts show that that continues to be a bit of a work in progress, albeit, if you look at where we were at the highs of sort of over 8%, a lot of that work has been done. The tightness of the labour market continues to weigh on their thinking and their sentiment. So the RBA sees anything under 4.5% as an unemployment rate as potentially being inflationary. And in February, we were still at 4.1. So that tightness in the labour market continues to be something that they will watch closely in their future meetings. Nonetheless, NAB's view is that we will get another rate cut in May, and which has been long overdue. And I think if you go back a step, it's interesting to think about before the RBA started hiking rates. It was 11 years before they had done their last interest rate hike. So if you were new to debt in the last more than a decade, you'd never experienced an interest rate rise. So it's not that we ended up in a place where rates were extraordinarily high. It was that we hadn't gone through an interest rate hike at all for more than 11 years. So I think that context helps explain why a lot of borrowers felt it to be quite overwhelming because we had the lowest interest rates we've ever had in Australian interest rate history, immediately followed by the most aggressive hiking cycle we've ever had in Australian interest rate history. So it did feel quite confronting, but it wasn't that we ended up at extraordinarily high rates. In terms of market movements, markets have moved enormously in the last few days around anticipation of where RBA pricing will land. We have the RBA at a terminal or a low in the cash rate of 310, and that's sort of by February 26, and I would expect that potentially could be subject to some revision. Market expectations is for a full rate cut in May, almost bordering on a 50-point rate cut if market is to have its right sort of lens on that. So a lot of changing views, a lot of volatility in the outlook at this point in time. I think one of the things to be mindful of is that we have monetary policy, which is our cash rate. But the majority of business loans in Australia are funded against what's called BBSY, which is the wholesale market rate. And it certainly has a high degree of correlation to the cash rate that the RBA sets, but it also is impacted by a wide range of impacts, both onshore and offshore. So I think for clients, it's understanding the role that the cash rate plays in the rate that they're paying on their loans, but more broadly, what impacts BBSY. If you look at all the different things that go into an interest rate for a client, you've got the cash rate and BBSY as your sort of the basis. They have margins and loans, fees that are attached to the loan itself, and the other part of it is sort of the wholesale cost of funds that the banks fund them, where they fund themselves in the market. And if the current volatility and risk continues in markets, you may well see wholesale funding costs increase. So there's a lot of levers that sit within that pricing component for customers that are subject to a lot of change at the moment. This slide just talks to and has a look at what central banks around the world have done. And what I like about it is on the right-hand side, you can see all the central banks. So you see Aussie, US, Norway, New Zealand, EU, Canada, and UK. And you can see that everyone was at or close to zero as a response to COVID until suddenly they weren't. And that rapid rise in cash rates around the world linked very much to underneath, you can see inflation data. And as sort of inflation is starting to behave in a way that central banks are looking, you can see that those cuts are starting to come through. I think most central banks at the moment would be just cautious around the impact of those tariffs and what the retaliatory tariff policies could look like. In terms of the federal budget, to be fair, budgets rarely move markets. We don't really see the impact of a federal budget or an election move markets terribly. The RBA was never expected to move rates in April. The next meeting that happens in May gives them the benefit of a couple of things. First of all, it's post-election, but also they get another look at quarterly inflation data, which would be their biggest barometer for what they do next. If you have a look at the budget, though, it probably has the risk of being inflationary. Interest is the highest spending item in the forecast period, and we see debt levels peaking at 37% of GDP in their forecasts out to 2030. So the more government bonds that are issued, the more pressure it puts on interest rates. So there is the capacity for it to become inflationary and to see interest rates move higher. In terms of what has been the Trump impact on markets, it's I really like this slide. You can see that all asset classes have taken a hit in terms of those Liberation Day Trump tariff announcements. The market was expecting. I think it'd be fair to say that the market was expecting some volatility, but probably not to the extent that we saw. And certainly this Trump presidency seems to be, there seems to be a lot more volition behind the rhetoric that we're seeing from Trump?
Yeah, very much so. If you think back to Trump, the first sort of presidency, there was a lot of talk around tariffs, and but ultimately they got to a bargaining sort of table and worked through that. So we didn't see these sort of big trade tensions escalate to the amount that we've seen now with this, obviously China retaliating this morning by putting a 34% tariff on goods imported from the US into China. So the destabilization of markets, I think, is very real at the moment. That has broad-based effects, not just to the currency markets, but to other asset classes as well.
I think what the market's trying to understand at the moment is, do these tariffs ultimately get resolved? Is it back to the negotiation table, or is there a longevity to these tariffs?
I think Trump's playing golf at the moment, so that's probably it's not going to resolve quickly.
No, I think we'll get an answer on that this afternoon. In terms of that volatility, and I'm less sort of interested in all the words there, but just to have a look, if we were to chart 3 months BBSY, which is the wholesale floating rate for the majority of business and commercial facilities in Australia against the 3-year swap rate, or essentially the 3-year fixed rate. From November 23 to currently, you can see the number of times. I think it's moved in sort of a 125, 130 basis point range, and it's changed direction at least 10 times. So as markets try to grapple with what direction a rate's moving in, it is an incredibly difficult task. And a lot of those movers that sort of are noted there, market movers, are a mix of both onshore and offshore events. So when we think about our clients and the risks that they are facing into, there's not one thing there that is within their control, essentially, in terms of interest rates, unless they talk to their banker, who reaches out to a market specialist. And of course, we are more than happy to help manage risk, be it across interest rates or foreign currency. And there are things that we can do to take that risk out. Just to have a look at what have yields or essentially fixed rates done since those tariff announcements. You can sort of see on the left-hand side is the US government yields, and essentially government bonds are the basis of the pricing point for fixed rates. You can see sort of how much they've come off, and similarly in Australia, that sort of fall off, drastic fall off. And since market open this morning, we've sort of seen a retracement of 20 basis points. So nearly like a full rate hike that's come back in. So market's definitely trying to get a grip on what that long-term position looks like, and has no certainty on that at the moment.
Certainly, yes, thanks, Sam. This morning was very much all about the Australian dollar. It traded to 59.85, so sub 60 cents, which is the first time we've seen that level since sort of COVID was August 2020, and we all know what happened in that period. So it certainly did take markets. I know there's a sea of red on equity markets today as well. And I mean, when Trump announced his tariffs last week, and imposing obviously a trade tariff on Chinese goods, and China has responded by a 34% tariff to imports into China from the US. And certainly there are no signs of both parties sort of coming to the negotiation table at this point in time. So the Aussie is down sort of 14-15% from its high in 2025. Sort of previous, we're expecting to see probably outside of the Trump piece, a little bit more strength in the Australian dollar. It has spent the last sort of 12, 18 months really sort of struggling between that sort of 63, 68, 69 cent area. Its long-term range is probably certainly more towards the 70 cents, 70, 73 cent area. So it has, for the last sort of 18 months, in an environment where the Aussie-US interest rate differential has been more supportive to US interest rates than Australian interest rates, the currency has certainly suffered on the back of that. So typically what drives the Aussie is interest rate differentials. So if you're a super fund in the US and you're looking to invest somewhere in the world, you want to have, obviously the highest rate of interest. So when US interest rates are higher than Aussie interest rates, you're generally going to see a sort of a move to sort of more safe haven currency exposure. Commodity prices and also our reliance and sort of close proximity to China as a trading partner. And really, that's what's driven this sell-off in the Australian dollar sort of early hours of this morning. Last week, it was sort of it seemed to survive the first Trump announcement, but with China retaliating, I think there's a real fear in the market that there is going to be an all-out trade war, and the Aussie will be, spend some significant time below 60 cents if that's the case. The so what for customers, franchisees, if you're importing goods, equipment, obviously from overseas markets, a weakening Aussie dollar is going to increase your cost of goods sold, the impact on consumer demand. If you're paying license fees to any overseas countries for setting up here in Australia, that's going to get more costly as the Australian dollar weakens as well. So the team here at NAB speak to a lot of clients across sort of small business up to sort of our corporate customers in helping clients manage foreign exchange risk. So when they have to make an overseas payment, so they have to convert Aussie to a foreign currency or convert foreign currency to Australian, that exposure, how much they pay in Aussie dollars, is going to be determined by what the current Aussie-US, as an example, exchange rate is at this point in time. So unfortunately for any customers today that had to make an overseas payment, they've logged on to their NAB Connect banking system and have been, obviously, it's been quite shocking for a lot of clients. So not a lot of clients had any sort of hedging on board and really short-term hedging. So, our role today has been really about sort of talking customers through what their options are and sort of trying to manage what this ongoing volatility, because it doesn't look like it's going to, I think the Chinese tariffs start April 10th. So it's a couple of days to try and resolve this. And as I mentioned with Trump on the golf course, it appears that, this sort of trade war isn't going to be solved anytime soon, because the Aussie is a proxy to Asia markets. In any time where risk sentiment is heightened, the currency will certainly suffer on the back of that.
Yeah, I think it's, if we've learned anything from the GFC, from COVID, from geopolitical tensions, it's that there's always an unforeseen event that is likely to move markets in a direction and in a quantum that certainly wasn't anticipated. And we certainly talk to clients about those risks, and this appears to be the next iteration of one of those events. There are so many risks in a customer's business that to a degree they can manage, but interest rate risk and foreign currency risk, we're certainly here to support customers in managing those risks, understanding what that market outlook might be and how we can help partner with them to reduce that volatility and protect the cash flow. So as we move, at the moment, it's less about the fundamentals around, economic growth, around inflation, labour market parameters, and at the moment on the, escalated geopolitical tensions and trade war outlook, those risks are certainly heightened. So if there's any way that we can assist in having a conversation with someone around foreign currency risk or an interest rate risk, please reach out to Desi or Rania and we can have that conversation.
And then should we open up for some questions?
Yeah, absolutely.
So lots of graphs and lots of charts and lots of conversations about volatility is probably
the key word.
The key word, and doesn't look like that volatility will ease. So I guess any questions either from an interest rate point of view or from a general, economic outlook point of view, what does that mean for the economy or from an FX point of view? All quiet.
Yeah. If you want, you can just take yourself off mute and ask the question. You don't need to type it in.
Okay, happy days. This
Questions,
is like,
there's a lot of information to digest.
Yeah, this is like the quietest audience we've had for a long time, usually on interest rates.
Not good news if you're
Hang on. Grant's got a question.
Hi, sorry, I joined late, so you may have addressed this. but I'm reading the Fin Review and they're saying that fast and deep, RBA rate relief on the way, say economists. Is that your view that, and they're quoting 4 interest rate to decline by 4 points or something? What's your view?
Yeah. So NAB's view has been for the cash rate to reach 310, and to be fair, we were probably of all the sort of the top 4 banks, we had the lowest terminal cash rate priced into our forecast. And I think that probably has more relevance in the current market than anything else. And you did sort of cover off briefly with that. Going into the May meeting, there's more than 1 rate cut being priced into that now. So I think if, before we even got to this point around tariffs and trade wars, the view was that the RBA was likely to cut in May because they would have that quarterly inflation number that would give them. I think one of the criticisms of the RBA is being consistent in both their guidance and their decision making. And so the benefit of having another quarterly inflation number is that they will give credit to their decision to cut rates. And the events of the last few days certainly amplifies that. So I don't, a cash rate that has 4 rate cuts coming at it seems quite plausible.
Thank you.
Interestingly, if I have a look at where markets opened this morning, you could get close to 3. So the fixed rate market moves very quickly to events like this, and we were able to get clients access to between 2 and 3 of those rate cuts already. So a 3-year fixed rate was pricing up significantly under where the floating rate was. So for clients that were ready to take advantage of that, we were able to get them that immediate access to rate cuts essentially before the RBA delivers them.
Do you think 0.5 percentage point is possible in view of what's happening to the markets and everything else in the world?
At the May meeting?
In May? Yeah.
Yeah, our view at this point is that we expect them to do a 25 basis point cut.
Okay. Thank you, and thank you for the presentation overall.
I would be reluctant probably to do 50 because that really sends a signal of panic.
Yeah.
Which and unless there's extreme circumstances of this sort of onslaught of volatility in equity markets as well, and the impact on global growth and obviously demand here in Australia. But a weaker Aussie certainly raises the potential for inflationary impacts as well. So it's a bit of a fine line balancing that they're going to have to balance between their growth concerns and inflation. But I wouldn't like to see a 50 because I think that would send a nervous sort of position to the market. As a mortgagee, definitely, but I just don't think that's going to be the case. My
And may I ask one more question, Helen?
Of course. Go for it, Gruntley.
Thank you. I must admit, I was shocked when I saw your expenditure slide that interest is now the highest expenditure of the federal government. Is that unprecedented, or have we been here once ever before where we spend more on interest than any of the services? I mean, I think that's just a shocking slide. I mean, it's not the slide. I think the data is shocking.
Yeah, I couldn't tell you offhand if that's the highest that it's been, but certainly, at 37% of GDP and accountable for 9.5% of the spending over the next decade, it's getting up there.
Well, I think, obviously an aging population, like there's lots that they're having to, we're not alone in that, but spending where it has to go. And that's the reason historically, I think that you would see this towards the upper end of that.
If you have a look at that sort of at the government debt in the top right, you can sort of see that it peaked through that COVID period and fell away, but then the forecast is for it to start to rise again. Not to necessarily COVID levels, but certainly to move higher from where it is now.
Yes, so there is a price to pay for government spending willy-nilly.
Yeah, absolutely.
Thank you.
Anyone else with some questions? Thanks, Grant.
Mhm. Any other questions?
So I've got one just around obviously fixed rates had a big move today and over the weekend based on what happened. Are we expecting any more changes on that fixed rates? As you know, obviously there's a few more things coming out this week, China, whatever, or do we think it's already kind of been factored in?
No,
Because the fixed normally moves faster than the variable.
I think markets is really trying to get its head around what this outlook looks like, and that's an unfolding series of events. So as we get some more learnings and more insights as to where these tensions land, you'll continue to see enormous volatility. We will be on the phone to clients executing trades, and the market is moving around on us, by reasonably large quantums. So I think, we're seeing where we're seeing borrower behaviour is taking advantage of those lows that we saw throughout Friday and at the open this morning. Rates have started to move higher again, but you'll just see that through. I think the important thing is that there's a degree of being opportunistic around managing interest rate risk, but at the end of the day, it's really, I liken it to insurance, putting some insurance on your cash flow, and there should never be a bad time to take insurance. So if you can couple that with at a time where rates are trending lower and it looks like it has some real value attached to it, then that's the best outcome. But nonetheless, managing interest rate risk is something, and protecting cash flow is something that I think should be paramount as a detached piece to where the markets are trading.
Okay, cool.
If there are any other questions, or if people would prefer to raise them offline, please reach out to Desi or Arani. I'm more than happy to have a chat.
Okay, great. Should we now move away from what's happening in our general economy and rates and foreign currency and switch to a bit of franchise lending tips?
Sure.
Sure. Okay, lovely. So I'm not going to go through a presentation for that part, and the reason for that is because it's definitely not horses for courses. So what I mean by that is, depending on the brands that we have online, there is a slightly different proposition from a lending point of view. However, from who our team is and what we offer more broadly, then that is squarely there regardless. So what I mean by that is the broader offering from NAB essentially says that we have a specialised team, which myself and Arania look after, small and large, and essentially also have what we call accredited spoke bankers around the locations. So we've got 70 business banking regions across Australia, which normally have business banking centres associated with them, as well as our small business teams, as well as our regional teams. So if you kind of add that up, there's quite a bit of presence of NAB out in the markets, and we have accredited bankers out there as well. So some people prefer to deal with us in our specialised team, and others prefer to go locally. The second thing that is the same is that whoever is looking after you, we will look after everything. So whether that be home lending, business lending, transactional, access to specialists like Sam and Tracy around interest rate risk management or foreign currency, access to a low rate franchisee credit card, access to equipment finance for cars or trucks. So lots of different access to specialists and assistance, even though you've got the one key banker. And in my team, you also have a relationship associate as well for some of those day-to-day things like transactions and statements, etc., etc. The other thing is that from our point of view, you will also have access to what we call, and the lady spoke about it as well, NAB Connect, or online. It's basically our business online banking for those that don't know about it. And obviously business everyday accounts, as well as potentially savings accounts to go with those. We have a transactional banking specialist that works one with the Rania's team and one with myself, that essentially will talk to every single brand, because every brand is different, every franchisee is different, as to what is it that they need, and we'll come up with something special. We do have some brands whereby we have dedicated lending parameters, and we also have dedicated transactional parameters, because we know that that's what they need, and then we have some dedicated pricing for them as well. And then in the general, and what's available is, last but not least, is that you also have access to the NAB website, which has a whole suite of tools around business and industry insights, market intelligence, and you can access a lot of the information, maybe not to the detail that the ladies presented today, but a lot of the information is actually on nab.com.au around market intelligence, as well as also tools to help you if you are looking for finance. Now, from a finance point of view, we do have an offering for all brands, regardless of whether they are on our panel of preferred brands or not. So I might touch on that one, because I can see some that are on our panel on this list, but I can also see others that are what we call our general offering. So our general offering essentially says that we will lend up to 30% of the value of the business that you are buying, completely unsecured. And we will also lend up to 100% of the market value of any residential property that you have. So a lot of people come and they say to us, oh, I don't have any equity in my property, I'm already geared up to 80%. Well, that's okay, because we can use the other 20% before we start looking at the 30% unsecured. The key thing there, though, is that we do still lend on what we call the 3 C's of lending, and any bank generally out there uses them. Customer or character. So how engaged are you in this business? How excited are you by this? What's your experience? What does that look like from a personal point of view, the person asking for the debt? Collateral, around what security are you willing to offer? As we said, the more property that you put in, the more you can generally lend, and also the cheaper your interest rates, because the risk is lower. And thirdly, then your capacity to repay. So that's where we also then have a debt service cover requirement, a DSCR is what we call that, for a minimum of 1.5 times. So that means if your principal plus interest repayments are, as an example, $50,000, then you need to demonstrate that you have $75,000 of income in order to cover that debt service cover requirement. And then on top of all that, if you have other lending for a house or for a car or for credit cards or for any other purpose, you also need to demonstrate that you have the ability to earn a return in cash out of the business or out of other sources to cover all of that debt servicing. So I guess I've given you a very broad view, because it's very tricky when you're talking about lending for franchise. And again, this is one of those where it's, if you want to talk further, please reach out to myself or Arania, and we'll let you know how that all operates. And on top of that, we also have different parameters for franchisors. So it's definitely not a one size fits all when it comes to lending. But in terms of hints and tips, there's certain things that are appropriate for everybody. So hints and tips are, be prepared. So some people think, well, oh, my brand's accredited, so that means I don't really need to provide information. Well, actually, we are still doing a loan. So we absolutely still need all the information that you would normally go in for any loan. The second one is do your due diligence. So understand with the franchise disclosure, with the franchise agreements, and obviously a lot of the brands, you know, you guys have been working on your disclosures and franchise agreements with the new code coming into effect on the 1st of April. So understand what you're doing, and understand as a franchisee You know, what money do I think I'm going to make out of this venture? Have a business plan, have a budget. These are key things that whether you come to NAB or whether you talk to any other lender, they will absolutely look for. And then the third thing is to really kind of start the conversation and really talk to someone and be clear and be open and honest as to what you've got and what you're doing and what you're looking for, and you know, and how engaged you are in actually driving this business. So they're probably three of the key things that go along with any application, any brand, big, small, accredited, not accredited. If you haven't had that kind of view on the business, then you probably need to go away and do that before you then come to a bank and say, right, let's start talking about some lending. So I know that Helen has told me I need to finish by 12:55. So currently 12:53. So I'm going to put it out here and say, any questions or comments or anything around that?
So good. Any questions? Everyone's quiet today.
I know, very quiet. We've definitely either bored them to tears or we've told them everything that they want to know.
Grant's back.
So, hi, I've got two questions. Well, if no one else is going to ask a question, I'll hog the time. Two questions. Can you talk around the time it takes for a good applicant? So a good applicant, what's kind of the wait time for a decision? Is in days or weeks or months? And also, if you've got time, the complexity of the application. So we recently helped a franchise partner apply for a loan with another bank. So it wasn't you, so you can breathe a sigh of relief. But the application was 24 pages long. Is yours the same, or is yours only 12?
23.
So time and complexity, if you could just address those two issues, please.
So I was just going to add around time. We generally do these in two different time slots, if you like. So there's a lot of people that aren't necessarily approved by the brand yet and will come along and say, hey, I'm interested in looking at this. So we do what we call a risk on a page and pull together some of the key financial data that we would need, i.e., you know, what's the buying price, what are the financials been, all the usual stuff. Do you have any ATO debt? What's going on in that side? And then we pull together the key financial aspects and put that into our credit teams to say, right, this is the transaction that is being looked at. What do we think? That process there probably takes, I'm looking at Arania here in your team as well.
Yeah.
What, a week, 1 to 2 weeks is what I will say. And for some pricing.
Yeah.
So that means you should be able off the back of that to get a bit of an indication of what's our appetite. Would we do this deal? This is the indicative pricing, and off you go. Now, that does not mean that that is a full application. That is more to say, yep, we're either good or actually we're not so good. So, you know, we always say that a fast no is a good no, as well as a fast yes is a good yes. So that's part one. Part two, when you then go into full application, that means we're doing all of your consents, all of your privacy, all of the credit checks, all of the company searches, all of the compliance and due diligence. In a lot of cases, we're setting up new entities. We need to do know your customer, etc. I'm going to say in that case, that's probably another 4 to 5 weeks maybe to get through the whole end-to-end process, as well as have documents and be able to sign something.
Legal vetting as well.
So yeah, we do legal vetting of trustees, so that all that compliance stuff comes into play, and that's a longer process. So that's the timing one. So hopefully that answers that, i.e. you should get a fast answer about, is this within appetite and something that you think you can do, with it being credit sanctioned versus a full approval where you're going to get money. The next part around the complexity, I'm not going to say that it's simple because I hate admin. However, it does require all of the stuff, the financials, the structures, ATO portals if you've got an existing business, projections, business plans. So it is a large volume of documents. In saying that, where we have an accredited brand, it probably is a little bit simpler in that we know a lot more about the brand and around the benchmarks and around the general performance, that we can absolutely probably circumvent that a little bit. But there is still a large number of information required. And what we can do off the back of this is send you our general list of requirements, Arania, or maybe our business planning template. We can send that out to Helen with our contact details. So then you know what it is that we would look for. And yeah, that 24 pages might be 23, Grant. So not going to hide behind that and say it's an easy process. But I will say that a lot of franchisees that are good with their paperwork have that stuff already. There are some that do struggle with that.
Thanks, Desi.
No worries.
Desi, and thank you. Thanks, Grant. Yeah, thanks, Grant, for your questions as well. I just want to thank Sam, Tracy, Desi, and Arania from NAB coming on today and giving us, some great updates and really good information actually to take away with. I'm pleased to say there was 37 people online today, which is good, and every state was represented. So we had South Australia was there, WA, New South Wales, Queensland, and obviously Melbourne too. So thank you, everyone. Now, our next Lunch and Learn is actually next week, and it's on the 16th of April, Wednesday. Next Wednesday, we are listening to Points for Purpose, the company, and they're going to talk about customer engagement trends in 2025. So that's a very interesting topic as well. So thank you so much, everybody. We're right on time, right on 1 o'clock. Thank you to the NAB team.
Thanks, Helen. Thanks, everyone.
Thanks.
Bye.